All right, Michael. Well, I appreciate you taking some time out of your day here. Why don't you tell my audience a little bit about who you are and what company you work for?
Well, my name is Michael Corkery. I live in Miami Beach, and I work for a company called HomeVest. And HomeVest is a fractional real estate investment platform that allows people to purchase single-family homes all over the United States for as little as $100. So we've been working on this project for a while, and it's something where we're kind of starting to bring it to market now. And so we're very appreciative of the time to speak with you and your potential in your community about what we can offer.
That's awesome. Walk me through what does that mean, fractional home buying? Like pretend like you're talking
Sure.
to my mom right now. Let's dumb
Okay.
that down a little bit. What does that mean?
Sure. Well, I think anyone who's bought a house or has participated in that transaction understands how complicated and expensive and time-consuming it can be, and it really prevents a lot of people from benefiting from investing in real estate. And so, with technology coming to the point that it is now, it allows people to, let's say, crowdfund a purchase of a home. And so, the technology that we have in our platform, essentially we are selling shares in an LLC that owns each home, right? So it's similar to buying shares in a company, although we're a private company at this point. But it's the similar process. You're buying a percentage of that house, and then it allows you to own a percentage of the revenues created by that house, whether it's the rental revenue or if the house is sold down the road, then part of the price appreciation. But it's essentially it's allowing a group of people to purchase a single home, where in the past it was only possible for, let's say, one person or one family or one entity to purchase purchase a home.
That's interesting. How does it? And I'm going to ask this from sort of a layman. Like how would this work? Selling the house. All right. So I guess maybe 50 people came in and purchased a house. Like what happens 10 years from now when that house I'm getting rid of that house? What happens in that type of scenario?
Well, okay, so it's a good question. Essentially, you own a share of stock in an LLC, and when a private transaction happens, the shareholders of the LLC will be reimbursed based upon the proceeds of the transaction. And so it's no different for HomeVest. Sorry, we got a little bit of fire emergency down the street, so I apologize about the background noise.
Yeah.
I'll just let it pass here for a second.
Yeah.
They're not coming to me, fortunately, so we'll continue.
Yeah.
But essentially, it's no different than if a company is sold in the future or you sell a home in the future, and typically the homeowner is the single shareholder in the entity, and therefore they get the proceeds of the sale. And in this case, for fractional investors, they'll be reimbursed their percentage of the capital gains on the sale.
That's interesting.
Does that make sense?
Yeah, totally. So if I am, let's say I'm looking for a home, I'm outside of Detroit, um, and maybe I don't have the upfront cash or something like that to maybe buy this home. I could potentially, theoretically, put up hey, I want to buy this house. You guys all want to come in together on this with me? Would be something like that to allow me to
You could.
acquire the house.
Yeah, I mean that would be one way to do it. I mean, you could create your own company that has interest from other parties that come in and invest. But the platform that we've created doesn't require that. Essentially, a person who has, let's say, $100 and wants to start investing in real estate and isn't afford to get a mortgage from a bank, or just doesn't have the ability to make monthly payments, can start building their real estate portfolio in a different way. And I think a smarter way, which is basically coming into our platform, deciding on which house they want, and purchasing a share of the house.
Yeah.
So you can do it the way that you described, or you could come to HomeVest and do it on your phone.
Yeah. So that's
instantaneous.
Yeah. So kind of if I'm new to investing and I just want to do real estate, like hey, I want to put in real estate. This would be like a real easy way to get into it without having to, buy a huge commercial building, let's say somewhere or something like that. Right?
Yeah, and right, exactly. I mean, and I think anyone getting into to investing will be told that real estate is one safe place to put your money. I think most people who have invested for long periods of time will tell you that real estate should be a cornerstone, or at least a significant portion of your portfolio. And for many people, their home is the largest investment or largest asset in their portfolio. But I think the issue is, okay, there's a difference between I need to do this and I know I can benefit from this, and am I actually able to do it? And so in the past and up till now, it really hasn't been possible, because in order to buy a rental property, you have to have enough money to put a down payment on it and to qualify for a mortgage, et cetera, or another type of loan or equity from outside. to come in to purchase that. And so it's really taken a lot of people out of that market, and therefore they're losing out on a really historically beneficial asset class to own. And so our goal is to sort of alleviate that pressure and make it more accessible for people so that they can start benefiting from it. And I think it also it's a smarter way of doing it. And one thing that I think people will grow to understand is the importance of rebalancing their portfolio, right? So let's say that after a year or two, the different asset classes have performed differently, and let's say the portfolio is not optimally weighted. Well, if they have to, add real estate, well, that can be tricky, right? So do you go and buy another house? Do you go buy a warehouse, et cetera? Whereas with something like HomeVest, you can go in and purchase a certain number of shares to create that balance and your weighting in your portfolio to allow you to have a more balanced and optimal portfolio. So there's a lot of different benefits of simplifying purchasing these types of assets, right? In the past, they're very illiquid and they're expensive to transact in. And so if you can alleviate a lot of those issues, then it opens up the door to a lot of trapped cash. I mean, if you look at what happened with Uber or Airbnb, the technology allowed that trapped capital to be unlocked, right? And then you see how much that's changed, economies for transportation and housing and travel. So HomeVest is a natural progression in that evolution, we think.
Cool. Now, is this something that where you guys are right now, that this is everywhere in, let's say, the United States, or are you guys focused on certain regions to start this? Like, where are you guys right now in that process?
Definitely. Well, I mean, we're agnostic in terms of region, but right now we're focusing on the Southeast. Our first two homes that we purchased are in Ocala, Florida. We're looking for markets that are, let's say, close to a large metro area. They have certain characteristics that make it an attractive rental area. So let's say there's lots of, for instance, in Ocala, there are some large distribution centers. So Amazon has a distribution center, Dollar General has a distribution center. There's a couple of other large manufacturing facilities that attract workers from outside the area to Ocala. And so that allows us to maintain a certain amount of demand in the market for rental homes. And we can also factor in some fairly decent price appreciation down the road as, this influx of workers continues to come into the region. So we are focusing on the Southeast. We would consider, properties. We looked in Kansas City recently. We'll look in the Northeast as well. But we're finding a lot of value in the Southeast, and we think that there's growth trends. There's a lot of migration from New York and California, going to places like Texas, Florida, and Georgia, South Carolina. And so those are the areas that we're really focusing on right now. Our first two homes, again, are in Florida, but I was in Savannah about 2 weeks ago looking at houses. And so that might be the next market that we go into, because we think Georgia has a lot of those growth metrics that make it really attractive for us as a company and also our fractional investors, because essentially that's what we're doing. We're acting on behalf of the fractional investors, finding value for them and then making it easy for them to transact into it.
Gotcha. So, and we don't have to get in the weeds of it, but when you're mentioning these sort of areas,
let's go to the weeds.
Well, just when you're thinking about areas and you're sort of curating this these different type of properties, what are maybe like 2 or 3 metrics that you're like, boy, we're really hoping for this, instead of that, right? What would those kind of be, as you guys are thinking about?
Well, I mean, the main one is cap rate, right? So we want to, and rental rates, because essentially what we're doing is we're buying rental properties. We're buying single family homes, and then we're renting them out to people. And so in order for that to make sense, the math has to work on the cap rate. So we're looking for a specific rent to purchase ratio, and to make sure that we can be like a 9% gross rate and maybe at this 5 to 6% net after everything is said and done. So that's kind of the first and foremost. If the rents don't make sense in that area, then it's probably not a really good candidate. But again, like what I mentioned with Ocala, we want to have that rent ratio correct. Ideally, good house, good condition, good area with, sort of an influx of migration to that area. We want net migration to be positive. And I think those are kind of really the critical factors. After that, we want to scale this. So obviously there will be certain nuances in each market, but we try to eliminate a lot of markets before we actually go and spend too much time investigating, because if they don't have those 2 metrics of a net positive migration and the type of cap ratio that we need, then we just move on, right? There's too many other factors that we need to consider. But, the places like Georgia, South Carolina, North Carolina, and Florida have become really popular in recent times with people. There's a lot of migration, as I mentioned, from California and New York, but all over certain states, they're coming to other areas. And with COVID, I think people wanted to get closer to the water, and in warmer weather, they can be outside more. So there's lots of factors that will kind of contribute to a sustained demand that we feel will support both the rental market and the resale market. So, I mean, that's probably a long answer to a short question, but I think those are really the most important factors that we want to take into consideration early on.
Yeah. And when you're starting to think about, maybe like long term, is there we hope to have 3 houses at a given time, hundreds of houses? Like where is this like breaking point in kind of the business to say, hey, this is how the fractional investors are getting the best bang, because boy, we are in these different locations. We have small houses, double story, 2-story, trailer, whatever it is. Like where does that kind of fall in, you think?
Yeah, well, I mean, we definitely benefit from economies of scale. The question is just making sure that we have, to first start with your answer, we want to have thousands of houses, right? And the more houses that we can acquire, the more benefit that we can bring to these various markets and to our investors. And so we feel that we bring a lot of efficiency to whatever market we go into, which ultimately benefits both the buyer and the seller.
Yeah.
So the first year, we're looking at probably acquiring 100 houses. And from there, we think we can scale up much faster. I think the philosophy thus far with the core team and the board has been to say, okay, let's make sure that we have everything right so that we can withstand the increased pressure and the stress that ultimately will happen if we scale this, right? And with purchasing rental homes and collecting rents and getting these things all integrated into an app, there's a lot of moving pieces. And so in the beginning, we want to make sure that we have everything correctly set up, and also as you start to get hundreds of houses or even dozens of houses, managing those rents and managing those properties is a full-time job in and of itself. And so we want to make sure that we're working with the right management companies and that we get our ducks in a row so that we get that asymmetrical growth. I mean, we don't want to be 10% a year for the next 20 years. We want to have that parabolic growth at some point. And I think that's we have the nature of business that can create that. But in order to do that, without everything falling apart, we need to make sure that we sort of build some organic growth and we understand what we're doing as it really applies to having all these multiple pieces interacting, right? And especially if you're purchasing and selling things on an app, it adds a certain level of complexity to the scalability factor. And so, we're looking to grow as big as possible, but we want to grow in the right way.
Sure. Is this something that lends better to new construction or existing construction? Is there some sort of formula in that you're hoping, hey, we need X amount of new properties kind of coming into the new builds, as opposed to houses that already exist?
Well, there's two prongs to the approach, and I think the first prong is ideally, we want to get these houses generating value as quickly as possible. There's a large portion of our investor base that is looking for passive income. And so getting those rents collected day one or as close to day one as possible is going to be really, really important. That being said, there's a lot of opportunity to get a better purchase price for new construction, especially if it's down the road a little bit. And that can really help with the overall return on the asset. So we're looking for a combination of the two right now. We want to have things that we can get rented right away. And then as we grow, I think it'll just be necessary for us to take on new builds as well, because there's people who are actually not as concerned with the passive income, but they're more concerned with, let's say, price appreciation down the road, and getting into a good development or a good new construction project early on can really let us buy at a discount and then really maximize the return once we do sell it down the road. So I think we're going to be looking for a combination of the two. Right now, we're focusing on rental properties.
Okay. Yeah. Interesting. Walk me through a little bit maybe on the tech side of this. Like what is being built behind the scenes? What is built? You mentioned that a lot of different moving parts here of properties, moving money back and forth, an investor coming and investing. Right. Let's talk a little bit about like the work that's gone into getting the app to where it is, and kind of things that you're still kind of working on when it comes to the tech side of it.
Yeah, well, I mean, it's a big part of it. I mean, we are accepting money via a platform, so it's important for us to make sure that everything is the way that it is. I think one of the big things is we're a Reg CF. We're selling Reg CF shares, and that's selling to uncredited investors, and it limits how much we can raise, but it also is an extensive process for getting the application in and making sure that we've submitted all the records and going through the due diligence process. And so that's been a really big part of the tech side, because the app side is it's we're not reinventing the wheel. We're taking an existing model that works and modifying it for our own specific purposes. And I think a big part of that is integrating the app with the website and the payment provider, and then to make sure that we have that done in such a way that it qualifies or is compliant with the SEC and all the regulations required for Reg CF. And so that's just been really the lion's share of work that's been going on behind the scenes.
Gotcha. And let's kind of talk a little bit too, maybe on, an idea that has pretty big scale in it. How do you kind of think about team members and a board of directors you kind of mentioned, and just how do you find the right people and the right team to really execute this and make sure that they can actually build what we're talking about right now?
Well, I mean, I think what we're going to have to do is rely on a lot of people who are remote, and I think that adds certainly the level of complexity to adding people. I mean, if we're doing transactions all over multiple states, that's going to require multiple title agencies. It's going to require multiple real estate agents and probably lawyers, et cetera, et cetera. And so as we start bringing in people for the core team, it's important that they're able to be flexible with what is required to get done. I mean, we're still a startup. And so, sometimes we're doing podcasts, sometimes we're doing financial models, sometimes we're doing marketing materials, et cetera. Yeah. And so we need to have a certain flexibility early on with people who come in and join the team that are understanding of the fact that, okay, as this thing scales, there's going to be a lot of unknowns that are going to arise, and we need to be able to adapt to those unknowns and work as a team to overcome them. And so the core team that we've built so far has been really great about building that sort of working relationship where, I can call the chairman at midnight with a question, he's going to hop on and answer it, and vice versa. And we're going to get things done because this is what's required to get it done in order for us to get to the next stage. And so I think just a positive mindset, a willingness to think sort of outside the box or work outside of the scope of work that necessarily was originally defined for you, and then to understand that, have a certain entrepreneurial spirit in what we're doing here, because ultimately we're taking a very simple business model and adding some tech to it, right? And so we're simplifying a process that used to be complicated and out of reach for a lot of people. And so as that becomes more within reach for a lot of people, that's going to create all sorts of new information that's going to have to be taken into consideration and put it back into the company to make sure that we're delivering the best product and service possible for our customers and our investors. Because I mean, ultimately, if we're doing business in 4 or 5 states, that's dozens of people that are in different jurisdictions with different set of expectations and different sort of price points that we're going to have to integrate to make sure that we can actually stay profitable and grow the company.
Sure. Yeah, that might be a monumental task. That's a big one, but you can do it, right, to grow this up.
It's they say pressure is the privilege, and I think it's a great problem for us to have. And I think what we've done so far gives us a lot of confidence that we're going to be able to make the right decisions that we bring in.
Yeah, totally. So what's your background a little bit? How did you get into this endeavor here?
Sure.
What brought you into HomeVest?
Well, I'm a Chartered Financial Analyst, so my background is traditional finance. So a lot of my work has been in private equity. I lived in the Middle East for a number of years, in Europe for a number of years. So I did a lot of private equity transactions overseas. I did a lot of financial models for acquisition of large real estate projects, healthcare projects, that type of thing. And that's originally how I joined HomeVest. Michael, the chairman, hired me to help him put together the financial modeling for investors on the platform itself, and then also what would happen to the portfolio of homes that would amass over time, and what that would do to returns for both the investors into the platform and to fractional investors. And so that really began our relationship. And from there, I've been working with him on just trying to make sure that we bring a product to market that is to resonate with investors and get people excited and motivated and let's say trusting enough to do business with us. Yeah. So I'm also a real estate agent in Miami, and so that kind of gives me a unique position to understand kind of how the transaction works and how the markets are in various places, and also the financial background to sort of put that into a larger context for what a scaled business might look like, sort of from the inside out. So that's kind of I guess maybe the secret sauce that I bring to HomeVest.
That's cool. Have you worked with a lot of startups in the past? Like, did you like? I guess there's like culture of startup world that you kind of mentioned, like the scope of work changes and stuff. Like, is that something that you were accustomed to, or like, nah, this is my first startup? Like, where are you in the sort of startup journey?
Yeah, definitely. I worked with a lot of startups in the Middle East and a lot of companies that were looking to raise capital as startups in the Middle East and Europe. And so it really got me sort of understanding the behind the scenes part of what actually makes a successful startup versus a not successful startup. And then when I was last couple of years, I've been working a lot of Web3 companies and seeing how fractional investing is happening in different types of asset classes and how blockchain is being integrated into some of these processes. And so that was my baptism by fire into how these sort of more fractional platforms and tech platforms work. And I think it's a really exciting space to be in. I don't really, after working for about 6 months in crypto and blockchain, I kind of the scales fell from my eyes, and the idea of necessarily going back to traditional finance wasn't as exciting as what was going on with because I was living in places which had not as good a banking system as the United States has, and so Web3 products and blockchain products had really made tremendous differences in terms of money transferring, investing into and out of, and getting those capital inflows and outflows safely into and out of countries that necessarily would be difficult to do so with traditional means. And I just, there's the old saying that, the Stone Age didn't end because they ran out of stones. And I think that's kind of where we are with, blockchain and crypto Web3 projects and fractionalization in general. So I think it's an exciting time to be in this space. And I think it's just much more exciting to have to sort of put your cards on the table every day and see what the community likes. Ultimately our business model relies upon enough people trusting us and feeling that we know what we're doing to go and buy a share of stock in a house. And so if we can resonate with people and we can sort of demonstrate that we are not just 9-to-5 guys, that we're here trying to make sure this company is successful as possible, I think it'll be really interesting the next 18 months.
Mm-hmm. Yeah. You mentioned it kind of, and I agree with you. You mentioned like trust. How does a startup, in your opinion, and just kind of talking, in general, how do you think a startup earns that sort of trust? What are things that like somebody else can like put out in that world to earn that? Because I agree with you, it's going to be a huge thing to feel that trust factor. How do you kind of establish that in a startup in 2024?
Well, I think it's skin in the game, and skin in the game can take the form of actual money out of their own pocket that they're putting into the business to grow it, or if they lack the resources financially to do what they're compensating in other ways. I think positive mindset's really important in terms of we understand that this is going to be a frustrating, tiring, sort of thankless process, but we're going to try to get through it as successfully as we can. We're going to make sure that the old saying that how you do anything is how you do everything. It demonstrates that we put as much time into making sure the financial model is correct that we do to the investment deck, as we do to the social media posts, as we do to those types of things. And I think that consistency and that willingness to have a professional attitude, regardless of how frustrated you are with it, or what a pain in the ass this form is to fill out, or it's understanding that you are not alone in this. Every startup goes through this, and the faster that you can get through it, or the more efficiently that you can get through it, the more likely you are to be successful. And I think investors who are looking at startups appreciate that. They understand that, you might not have the money available to grow this, but if you had that money, there's a very high probability that you could, based upon how you carry yourself, how your materials look, how your communication is, what steps you've taken. What I found was when we spoke to a lot of startups that weren't raising capital, a lot of them seemed that they were just waiting for the money to come in before they started working. And I think you want to see groups that are working regardless of whether or not they have funding. They're doing whatever they can to push the process down, because it's maintaining that momentum so that at some point, if you do get the capital, that momentum can really take off and actually grow the business. Otherwise, if you're just waiting to get paid to do the job, how passionate are you really about what you're trying to do? And I think a lot of people rest on the laurels of, we're a startup, blah, 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 we just need funding to get started. And they're not really taking time to look at what can be done right now without the capital that keeps this thing moving forward, and not just staying stagnant until money comes in, because typically that was a very long time.
Yeah. when you guys are sitting around your team and stuff, and you're thinking about HomeVest, what's keeping you up at night? What is the thing that you're like, right now we've got to, this is our big mountain to climb right now. What's keeping you guys up at night?
Convincing enough people to buy a share of stock. That's it. I mean, that's our only business model, right? I mean, we're not introducing some new type of investment concept. It's not reinventing the wheel. It's very, meat and potatoes. You're buying a single family house, you're renting it out, you're collecting rental income, and you're passing it on. So this is not something that's revolutionary in any sense. And so the investment thesis has been proven, right? There's enough. We have competitors in the market that are successfully transacting with people and growing their businesses. So we feel there's enough market share to do that. The question is, can we, as the group of people that we have as HomeVest, sort of resonate with total strangers enough to get them to stop what they're doing, put down their phone or put down whatever, their Netflix or whatever, log on, set up an account, and buy a share of stock. That whole process is what keeps us up at night. And so that's, if we can do that, then we'll be successful, because the platform is good. Our partners are good in terms of our technology partners, in terms of, making sure that the regulatory hurdles have been cleared and everything's transparent. So beyond that, we don't really have any excuse for failure other than not being able to build trust with and rapport with our community.
Yeah,
right?
yeah, that's a big one.
And I think that's what everyone struggles with. And anyone who's, because again, sorry to interrupt you, but like our whole business model relies on the fact that we can get a couple hundred people or a couple thousand people to participate in one thing, and then that's just for one house. Now multiply that times hundreds, if not more, houses. You have to be able to resonate so quickly with distracted people who are far away on their computers or on their phones to stop what they're doing and actually do business with us. And I think that's a really nuanced and challenging thing that will continue to evolve as we do this. But I think that's really our only business.
Yeah, yeah. You mentioned something earlier that just kind of popped back in my brain. You mentioned this like unlocking of capital, right? Just this concept of it, right? That's kind of happening.
Yeah, trapped capital. Yeah.
Yeah. In this industry in particular, who are you unlocking it from? Like, who is the gatekeeper in your opinion in this?
Yeah.
And is there somebody or something that you might be, dethroning to some degree? I mean, you mentioned like, you have experience in real estate. Like, are you going after real estate? Is there somebody who's moving on for you to get into this world right now in your mind?
Let me answer the first part of the question first. I think, I guess what we're trying to do is, in terms of unlocking capital, okay, mortgage rates are like 7% right now. We feel that we're not taking what Uber did, where you're taking cars that weren't being driven or being driven for taxi purposes and converting them to something new. But we feel that when we go into these markets, that we're becoming a buyer, not of last resort, but an alternative to the traditional agent relationship or brokerage relationship, or for sale by owner type relationship. And we feel that, especially down here in Florida, if rates don't come down, if mortgages stay where they are, there's the likelihood that prices come down as well. And there's a likelihood that banks will continue to be a little bit hesitant to lend more capital out. Right. Okay, so if that happens, then the sellers are going to be sitting with houses that aren't being sold. And if we can come in and buy those houses and convert them into rental houses, we can help them, the sellers, in terms of not gouging them on waiting for the price to go down by 30, 40, 50%. But we can come in and say, hey, listen, at the price that it is right now, we can make good money. We can rent it out at this price. And sort of, I guess, maybe, I don't know if it's unlocking is the right word, but maybe we can liquefy the transaction, or we can add liquidity to the market, or add a liquidity pool that wasn't necessarily there before. And in terms of who we would take business away from, maybe the traditional banks, traditional mortgage lenders, because we can step in and say, directly to an owner of an asset, like a home or something, and say, hey, listen, you can put your house on our platform, and we can sell it for you, and you don't have to go through the messiness of the process that you had done in the past. And so, I think I don't necessarily think a lot of people are going to be displaced by this. I think the business is evolving in that direction anyways. And it's going to come to the point where why would you go through the messy process of selling it in a traditional way if you could just, I mean, I'm sure you've seen, sellmybusiness.com or buymyhouse.com or these types of places where people are just glad to get rid of it, or they're happy to avoid the messiness, and okay, they'll take a hit on say the sale price, but alleviating the need to go through, could be a 6-month or a year-long ordeal that is going to end up being very expensive. And you still might not get a great price at the end. That might be reduced slightly by what we're sort of bringing to the table. But I think, for real estate investors,
I'm thinking about a little bit in my mind too. Is there's almost this. So I have a scenario where my grandma, she's 92, right? She's owned her house since 1949 or whatever it is, right? It's been forever.
Yeah.
And is that a house that I'm just immediately selling, or am I thinking like this is maybe it checks off all those boxes you mentioned before, but like it could go into this, and now all of a sudden it might be a little bit of a different revenue stream or something along those lines. It's almost like
absolutely. Yeah, and I think this is where the technology is so interesting because it unlocks all these different options that you can do. I mean, in theory, you could sell part of the house or 3/4 of the house or the whole thing and rent all the rest. And so it allows you to fractalize the opportunities that exist within that asset. And so I think that's what's exciting about this space, because I think it is creating value where it didn't exist before, and that's always a good thing for investors.
Yeah. So
and from both sides. I mean, if you're a seller, that's good for you as well. It's not just about the people that are buying it; it's the seller's benefit as well. And I think that's rare that you have an opportunity that has some synergy for both sides.
Yeah, I agree. No, I mean, again, as this conversation's happening, it literally is like, ding, I didn't even think about this. Like, this could be a scenario.
I'm blowing your mind.
Yes.
No, but I mean, we think about this all the time. And so for us, we keep thinking like, oh, we could do this, right? And so as we start doing this, what we're doing now is very meat and potatoes, as I said, but there could be lots of different things that open up down the road once we realize how we're going to get a ton of information from these first houses, right? And we're going to figure out, there's going to be some a bit of a learning curve, but once we get that momentum built, I think there's going to be a lot of opportunities that we didn't necessarily consider that we should start considering down the road, because it presents itself. And so I think that's the part that is interesting about it as well. It's not just like a factory, like we count, we stamp this part every day, rinse and repeat. There's opportunity, there's unknown unknowns out there still, which is always exciting.
Yeah, there's also scenarios, again, I'm being selfish and taking my own thoughts here as I work through this, where I may not want this house in my name because I either capital gains taxes, right? If I were to just sell, maybe that comes to me, right? So no, and how would this all work? And then what if I would lose the homestead tax credit that you get if you have multiple homes, right? So there might be people who are like, I'm inheriting these assets, I don't want to get hit with taxes, and I don't want to, so is there something else I could do?
Yeah. Well, I'm not a tax lawyer or a tax advisor.
I'm just thinking about what would be a narrative in there,
I think the thing is, let's say that go back to the example of you get it from a family member. Let's say that there was a death in the family and you inherited a house. You might live in a different area. It might be inconvenient for you to go and see the condition of it or to fix it up, to sell it. And it's streamlining a lot of those opportunities, which will be significant. And I think that, coupled with the existing housing market, where people are interested in selling their houses, whether they're moving or they want to upgrade or downsize, whatever, will create a large pool of I think, loyal customers, because they'll feel that there is a better, more, let's say, holistic way of getting rid of this thing, as opposed to hiring a real estate broker, going through all the contracts, going through the lawyer, transferring the title, all that stuff, where we can make it very simple for you and achieves the exact same thing.
Yeah. That's interesting. Yeah. Interesting. So tell me what is like the next maybe couple quarters look like? Like, what is, man, these are our but this is what we're working on right now. What's next, like 4 to 6 months?
Yeah. Okay, so that would bring us into roughly July, August. Mm-hmm. We have 2 houses in Ocala. We're closing on the middle of, so the 15th of March or the 18th of March. Those will be rented April 1st. We'll begin there's a lot of marketing and social media that are going to be going out over the next couple of weeks, one of which is yours, obviously. And that's going to start pushing more capital into the platform and also into these houses. And so we want to start acquiring more assets that we can start turning over as rental properties. So it's a lot of building a relationship with property managers to make sure that as soon as we buy it, it's rented and taken care of and the tenant's happy. And then that money flows correctly back. That will take a few months to make sure once we get these things live. Obviously, we want to make sure probably, April and May will be making sure that the system is working and that we're, if we can handle 2, then we can handle 4, and 4 is 8, and 8 is 16, et cetera. And then it's looking at moving in. Right now we have 2 in Florida, so probably acquiring a couple more in Florida, and then looking at Georgia, South Carolina, and North Carolina for opportunities. I think that's going to be the next critical markets for us to get into, and then that should take care of us through August for sure. I think if we could have houses in all 4 states by then, I think we'd be very happy about where the platform has gotten thus far. So I think that's kind of the next couple of quarters, making sure that people can download the app easily, that there's no problems, no bugs. I think that's really the phase that we're in right now, for sure.
That's awesome. Where should kind of people go to just at least learn about this stuff? Where do you want people to go for to learn more?
Well, I mean, go to homevest.homes, which is our website that has a ton of information on the website, as well as our private placement memorandum, our investment deck. There's videos of the house that we own, information about Ocala, et cetera. What we want to do is essentially create a platform, or at least a nexus where people can go and they have access. If their investors are looking at, okay, there's a house in Ocala, Florida. Why do I want to buy a house in Ocala, Florida? So we have, stats about Ocala, reasons why we think it's a good investment, opportunity, the factors that we are factoring into making that decision, showcasing the city, the target market, that type of thing. So they can educate themselves on, everything that's important about that house and how much it's going to be rented for and what the potential appreciation is on the back end. So HomeVest.homes is the most important place for them to go for now. We're going to be, a lot more active on the social media platforms we can link to from the website, but I think that's really the best place for people to start to get to know us.
Awesome. Well, we'll definitely put a link and everything. But Michael, before we go, I do want to pivot just a little bit into some questions that have nothing to do with anything we just talked about, just to learn a little bit more about you. So question number 1, what are you watching right now on the old streaming channels there? Anything you're watching right now that people should check out?
Yeah, I just started, I think, in the 5th episode of True Detective, the most recent, and which is fantastic. The first one was really good, and I thought the next 2 seasons weren't as good, but this one I think they got their swagger back. So that's what I've been. That's my guilty pleasure. How about you?
Fargo. So I'm on the 5th season of Fargo, and then True Detective is going to come on the heels of that. So we've got them all lined up.
I'm from Minnesota, and the Coen brothers grew up right nearby my house, and so the movie Fargo was filmed in Minneapolis, and so there's a lot of places that you can see in the movie that were around my neighborhood. So what's funny is how accurate the accent is. So I'm sure the one that they have in the new series is quite good as well.
It is. But so, man, you're are these actually true stories? Did these things really happen in Minnesota? Because I can't tell, and I don't want to Google it.
I mean, it goes a very long winter, so lots of weird things happen in Minnesota. I think they say they're inspired by true events, if I remember correctly. Yeah. So I don't know what much liberty they're taking with the truth, but it's very possible.
Yeah, interesting. How about books? You read anything or any new music or anything like that?
Yeah, no, I just finished the history of the Peloponnesian War, which sounds really nerdy. And I took a long trip up to Savannah, and I listened to a Jack Reacher audiobook on tape, which is, really, beach. It's like beach reading, right? It's really, mindless entertainment, but fun. So those are kind of the 2 ends of the spectrum.
Yeah. When you were in Savannah, do you know if they still have the Savannah Stopover? Do you know what that is? Have you ever heard of that?
What's the Savannah Stopover?
It was a music festival that was like the week before South by Southwest, and it like shut down the whole town, and then
really?
I think COVID killed it, and like many other things, and I don't know if it ever came back, but like, man.
Well, they have the Savannah Bananas, which is the best named baseball team I think in the country.
Is that the Funny
But
Banana
no,
where they
I
have,
don't know.
like, weird stuff in it? Is that where they do weird skits and stuff in the games? Is that what that
Oh
is?
yeah, it's a minor league baseball team. So I mean, there's all sorts of shenanigans that go on. Not a lot of great baseball, but it's, from in Minnesota we have the Minnesota Saints, and they do haircuts and all sorts of crazy stuff going on during the game. So it's sort of more entertainment than it is baseball. But no, I mean Savannah is just I spent 10 years in Europe, so I got to live in a lot of old cities, and I don't know, like there's something really special about Savannah, and it sort of reminds you how good American design was, back in that era as well. And I think there's so few examples of colonial era architecture in the United States that when you see it and you see it that's been preserved like this, it's really special. So it's an area that it's a market that we're very excited to get more familiar with, because it allows us to spend more time in Savannah. So it's a win-win.
Yeah, how'd you get from Minnesota to Miami? It feels like that was, and then some Europe in there, like in Minnesota. I mean,
Yes. Well, I left. I moved from Minnesota to New York in 2001. So I moved to New York 2 weeks before 9/11, which was a very interesting time to move to New York City. And I worked on Wall Street for 5 years. I liked it, but I've always wanted to travel, and I wanted to live in Italy and just have an experience, just sort of that total, unfamiliar area. So I left in 2006 and went to Italy for a year. Loved it. I got the travel bug, and then was in the Czech Republic for a couple of years, was in France for a while, and then I got hired to go to Saudi Arabia to start doing consulting in Riyadh, and did that for a while. This was 2013, 2012, so very different than the current regime, much stricter. Then that made logical sense to go to Dubai as opposed to stay in Riyadh. So I stayed in Dubai, which is a lot more fun. No offense to Riyadh, but it was just a different time.
Yeah.
And then kind of worked my way back. I always wanted to go back to the United States. I finished the CFA program, and that was kind of the sort of, I think, the exclamation point on that chapter. And it was sort of like, let's transition back to the U.S. And then it became more, I want to live in the U.S. And after living in Dubai, I can't handle winters anymore. So anything above like the Mason-Dixon line was completely out of the question. And then COVID got really crazy in Miami. Miami seemed like a really good option. And I came down here, and I went to Miami Beach, and I was like, okay, this is perfect. So that was, a very, circuitous way to Miami Beach from Minnesota. But it's, I'm a sucker for the beach, so it's hard to pass up.
Yeah.
You're in Detroit, is that right?
Yeah, but yeah. So today it's 27 degrees with some snow and ice out there, and
Yeah, no. Yeah, I'm having some a little PTSD. But okay. Since you're from Detroit, like how disappointed were people in the Lions losing?
It sucks. It's really bad.
Yeah,
man. Yeah, and
is
it was.
It's still a hangover.
Yeah, it's, and I don't think it's gonna go away. It's and this was like the first time watching a Super Bowl that you're like, I don't really care. I'm not. I'd rather.
Oh no, it's got no.
It's you watch the game, and it's a good game.
Yeah.
And it's like we could have every play. Like, we would have stopped that. We would have beat that. We would have beat. Yes.
And I think also everyone was rooting for you guys as well. So it was kind of it was sad to see it end, but
kick the field.
Now you know what Vikings fans feel like. You actually have something to play for, and then it gets you're heartbroken, and you move on to the next year and it's all over again. So, but I think you guys are a very good team, and you have a very good coach. So I would imagine that you guys will be really competitive. Be much better than us, at least, for the next few years. So if that's, I don't know if that means anything, but.
Well, it would kick the field goals. Hopefully we learned that lesson. You just kick the field goal. You don't have to go for it always.
So close, so close.
I think the other thing too is if it was like a blowout, it would have been an easier pill to swallow. Like, all right, we just weren't as good as but like to be up and then just crumble.
Oh yeah, because you were way up too. Like it wasn't like you were just up. It was like, this game is over. But there's the old saying, it's better to have loved and lost than to never have loved at all. And I think that's where you guys are.
Sure. All right,
I think you guys have the. It seems like Campbell has completely changed the trajectory of that team and the mindset of what that team is like.
Yep.
And so I don't see you guys sort of regressing back to, let's say 90s and 2000s. Yeah, like the last 50 years of Lions football. But yeah, what are you gonna do?
Yeah. Well, awesome, Michael. I appreciate you taking time out of your day. I know busy
My
schedule,
pleasure.
and really enjoyed this conversation. I know our listeners are
Me
going to
too.
love it as well. And obviously, I'll put contact information in. So if anybody is listening to this and you guys want to reach out to Michael, obviously reach out. Go to the website. We'll have all the
Absolutely.
links and everything too. But Michael, I appreciate you taking time out of the day. Great conversation, and super excited
Thank
to
you.
watch what HomeVest does over these next few
Yeah,
years.
absolutely. Absolutely. Great. Thank you.
Awesome. Thanks so much.